Robinhood, which offers equity, cryptocurrency and options trading through its app, is due to make its highly anticipated debut on the Nasdaq. The company was valued at $32 billion after selling shares in its initial public offering at $38 each, the low end of the expected range. Well, let's talk to Susannah Streeter, Senior Investment and Market Analyst at Hargreaves Lansdown. Susannah, welcome back. Robinhood has become a gateway to the markets for young and first-time investors. I think it's got more than 20 million active users. This was a highly anticipated listing. Why do you think the company so far failed to raise as much as it had hoped?
Well, as you say, it was highly anticipated, and this is a very popular trading app. As you say, those user numbers really have grown quite dramatically from just over 7 million last year, March last year. So you can see the surge in popularity of share trading over the pandemic. That's partly one of the reasons why perhaps this listing wasn't quite exciting enough for many institutional investors in particular, because there is some expectation that we will roll back from the high intensity share trading that we've seen over the past year, with so many people piling up savings and dipping their toe into the stock market for the first time. But the other really main element here for Robinhood is that it's facing a lot of regulatory scrutiny going forward. Its app has been criticised for not just the gamification of trading with kind of celebratory notifications coming on screen when users make a trade, but also what's called its payment for order flow, the way it makes money. And that is because it doesn't actually charge commission on trades, but instead it gets fees from companies it routes the trades through. And the regulator, the SEC, is looking at this in the United States with a possible view to changing it.
Just tell us a bit more about these significant regulatory headwinds. What do you think is ahead realistically?
Well, certainly Robinhood and just the way that it operates is coming under intense scrutiny, not least because of the share trading frenzy we saw earlier in the year surrounding meme stocks like GameStop and AMC Entertainment. And a lot of the trades were funneled through Robinhood, and that caused real concern that it was causing volatility within the financial markets. And even Janet Yellen, the Treasury Secretary, stepped in at that time and said it really needed to be looked at. So I think the main regulatory headwind is whether or not its main source of funding could change, and that could be a real headache for the company going forward. But also it's faced scrutiny from other regulators as well, across the United States. In particular, the Massachusetts security regulator accused Robinhood of gamifying investing as well. And there are other regulators as well looking at just the way Robinhood operates, with a number of federal bodies investigating the company. So I think those are the main regulatory hurdles ahead. But of course, if it can bat these away, and if the level of share trading continues, and of course the company has a huge amount of support and lots of different forums on the internet, it could potentially lead to an acceleration of growth.
Well, 20 million active users isn't to be sniffed at. I mean, we hear what you're saying about the possible regulatory issues, but this, on the face of it, has been a whole new world for young and first-time investors. What do you attribute the secret of its success to?
Well, I think now what you're seeing is social media and the financial world really colliding. And this is a trend that really has taken hold over the past 18 months or so. And it's partly a pandemic effect, because with so many people locked up at home with little other activity, so many more people have turned to the stock market. And in many ways, that's really encouraging that more people are dipping their toe into the stock market for the first time, are becoming interested in investing. But the real problem and the real cause for concern is that perhaps too many are chasing the hot stocks, those stocks that appear to be rising very quickly, and people are jumping on the bandwagon in expectation of fast and quick returns, when really they should be looking at diversification and looking at the long term. And so that is the real challenge going forward, is to translate the kind of quick buck investors into those looking at a long-term investment and a long-term relationship with the financial markets.
And if that happens, is Robinhood and it's like the future of trading stocks?
Well, yes, I mean, it's very well placed because, as we say, we talked about this huge rise in the number of active users and the amount that it's making from payment for order flow, the system that it uses, which enables these trades to be free for its users. It made $720 million for payment for order flow, 3/4 of its total revenue. So you can see that its business model, if it's allowed to stay, is very attractive for those users. But of course, they do have to pay for the trade somewhere.
Susannah Streeter at Hargreaves Lansdown in Bristol, thank you very much.